Victoria from the usual team, and today we have a conversation that's been a long time coming. With me, Pierre Persson, CEO of Usual, and Gisli Christiansen, CEO of Monerium. Last week, Usual launched a direct fiat on-ramp and off-ramp for Euro Zero, powered by Monerium's infrastructure. No centralized exchanges in between, just a SEPA transfer, and you're in DeFi. But this space isn't just about a product launch. We want to talk about what this means for the industry, why the real bottleneck of DeFi has always been the entry point, how regulated infrastructure changes the game, and where this is headed. So, Pierre, let's start with you. You've been building Usual as an on-chain neobank, but until now, getting euros into DeFi still required going through a centralized exchange. What's actually broken about that?
Yeah, clearly. So glad to be there. So like you said, the paradox is quite simple. If you want to access to DeFi currently, that's quite complex. You need to bridge, let's say, TradFi to DeFi with a SEX. So you are leaving your bank, but you lend into Binance or Coinbase and so on. So that's quite complex if you want to be exposed to DeFi product, to discover what's the future of finance and so on. So it's why clearly, let's say, newcomers and so on have so much difficulty to access to this market. And I think the bottleneck isn't DeFi really itself. It's mostly the UX in DeFi that have, even if massively improved with, let's say, Vault, AMM, lending market, and so on. But clearly, there is a lack of simplicity. And you also have a hidden cost, because if you are bridging, you pay trading fees to SEXs and so on. So really the idea behind that was to find a good path for onboarding new people in DeFi. And having an on-ramp and off-ramp is quite key if you want to offer a smooth product to users. So clearly we'll build that together with Monerium. And really, I think it's also a key solver that we will build that, because in the future, bridging your asset from TradFi and DeFi will be in one click. And so that's clearly the future of crypto.
Okay, and to Gisli, you founded Monerium in 2017, long before DeFi existed. When did you realize the on-ramp problem was going to be the problem?
So first of all, thank you for having me. I'm honored to be here with you guys and building alongside you, because I think, neobank projects like Usual are the things that are needed in order to break out of just, cryptocurrency speculation and into mainstream. And I think that's kind of where we're always been headed. That's been where, we've sometimes said internally, if blockchains only become an instrument for cryptocurrency speculation, then we as an industry, we have kind of failed, right? So I'm happy that Usual is alive and we're working together. But to your question, so if we kind of think about how stable coins originated, they weren't born out of a need for, managing treasuries on chain or something like that. It used to be a mechanism for centralized cryptocurrency exchanges to have access to fiat rails. Because if we go back to 2017, crypto was still very fringe, especially with regulators, especially in more reputable jurisdictions. So having access to fiat rails was almost impossible. And that's why I think stablecoins kind of emerged as a solution to that. And because of the nature of crypto being mostly denominated in US dollars, it only made sense to base the stablecoins of US dollars. Then fast forward, I think some of the more reputable exchanges then actually got access to fiat rails, which kind of created a loop, if you will. So you could actually go to an exchange, buy cryptocurrency, sell cryptocurrency, and have a stablecoin. But this was, notoriously inefficient in many ways. And if you think about the euro stablecoin like Monerium, like the euro has always been, and was at least back then, as a second-class citizen to crypto speculation. So there wasn't really this kind of need, but we were always thinking like one step further, like when the mainstream applications come, like Usual. So from sort of a first principle thinking, we were always constantly thinking about how do we actually lower the barrier for the adoption of this technology. And kind of reflecting back, like we launched the Web3 IBAN, or whatever you want to call it, back in, what was it, like 2021, so a few years ago. It almost feels like a natural evolution, but back then it was a great epiphany. And what we essentially realized was, if we connected the traditional payment system with blockchain infrastructure, which we could, we would solve two issues at the same time. Number one, as I mentioned, lowering the barrier for use cases like usual. And the other is kind of solving the liquidity issues around on and off ramping. Pierre, you mentioned, like, there's costs associated with, bridging and stuff like that. And, going from a bank account to a blockchain is a form of bridging. But if you're the issuer, like, you can become so much more efficient. Like, we can receive €0.50 or 100 million euros, and there's no cost of capital for that. Like, the process is the same. Of course, compliance will be a little bit different for the 100 million, pay in, but you get what I'm saying. So I think it's a natural role. We have an advantage when it comes to, straddling the chasm between TradFi and DeFi.
Okay. Thank you for these answers. And so let's get concrete. How does a euro actually travel from someone's bank account to Euro0 on chain? And what role does Monerium play in that journey?
Okay, so I'm going to go through then maybe, the steps involved on our side, and then I can hand it over to Pierre to take it from there. But effectively, there are a few things. Like, if you think about the regular bank account, so you go to a bank and you need to go through KYC, and the bank will then issue a bank account number, right? In our case, in our world, we don't issue a bank account number in the sense that the user brings their blockchain address, right? So we need some form of linking the underlying KYC data and your address, your wallet address. And this is handled through what we call linking. So you'll provide a signature for that, and we can then associate to say, like, hey, this is Pierre, we know him, this is his address. And once we have that in place, we can effectively issue another kind of identifier, an IBAN, the international bank account number. It sounds really simple, and in fact it is. So if you think about your blockchain account, like where you store the money, you have the wallet address kind of pointing to your account where you hold your assets. We just have another kind of identifier, the IBAN, which points to your account and is connected to the banking system. So you now hold a bank account number that is in your own name, and you can talk to your peers, or transact to your peers who haven't been kind of converted to the beliefs of blockchains, right? So they will only see your address, and this could be your friend, this could be someone who needs to pay you, and whenever kind of money is received on this IBAN, we are, as you may know, like, we are regulated, so sometimes we put on suits, so we get access to the same systems the bank do. So we actually have the capability of kind of settling in the same payment systems. And whenever we detect the money coming into Pierre's personal IBAN issued by Monerium, our system will automatically detect it, take it out of circulation by a process called safeguarding, and then minting the equivalent amount of tokens into his wallet address that we talked about earlier. So that's how kind of money flies from the bank account to the blockchain address in virtually like 5 to 10 seconds in the happy case. And from there, Pierre, maybe over to you to kind of describe what happens once the URI has been minted and how it goes into like Euro0.
Sure. Yeah, I can continue. Yeah, maybe Victoria, if you're okay. So clearly, I think you said it. The main problem of stablecoin is that it's very efficient in DeFi if you want to pay someone, but it's not really efficient if you want to pay, let's say, in fiat, because you have stablecoin and they are not compatible with TradFi. So you have really two different systems, and that are monetary systems that are way really, really different. And the idea is to offer something that allow your stable coins to be sent in the real world, in the, let's say, former old infrastructure that are banks right now. And so what we are doing is that we use Monerium, especially EURE, as a rail, and we'll build on top a stablecoin that is composable in DeFi, that can be used also in our ecosystem, and that is backed at the end by some actors that should be there, maybe that are Spyco, for instance, that give access to sovereign T-bills. So you are sure that the stablecoin at the end, after onboarding and using EURE, that is the rails, are backed by T-bills, because that's really important. If you are making a fiat-backed stablecoin, you should be the closest to the fiat, and so you are using bonds and so on that are really liquid, that are ensuring, that users at the end have a degree of certainty that is quite high in the fact that the stablecoin is one backed. And so what we are doing right now is to build a stablecoin and a rail that allow you, to use your stablecoin in DeFi. That will be Euro Zero, and that can be composable, usable to invest, usable to lend, borrow, or maybe to make some yield. And whenever you want to offboard and to off-ramp and on-ramp, you can use a rail automatically that can allow you to directly communicate with your bank account. And that's quite a key aspect. So we both align the regulation of the product that is offered by Monerium with a quality of infrastructure that is unique in Europe, plus also the fact that we have a regulated asset backing the stablecoin that is also regulated in Europe, that is EU TBL, that is just sovereign T-bills in Europe, that offer I think one of the best quality in terms of collateral for backing our asset when you are using usual.
Great, thank you for these answers. Sounds very interesting, and I actually was wanting to ask you, Gisli. So Monerium was the first EMI to comply with MiCA. A lot of crypto builders see regulation as an obstacle. You clearly don't. Why?
Well, that's a good question. I think, like, going back to kind of the origin days of Monerium, I mean, we did a lot of first principle thinking. One was around usability, and we've been just stubborn enough to stick to our guns. The other was kind of like, I would say, if you really think about it, money is a political instrument, right? So, I mean, you have the central bank, you have all the laws, and now MiCA, as Pierre was kind of going through. And to us, it just seemed very, very, and maybe so, because we also came from Iceland, which was hit pretty hard by the financial crisis. So, like, the nature of money, just what is it? It's first and foremost a political instrument in our minds. So if this is something that you want to, if you're saying like, hey, here's blockchains, here's all those wonderful DeFi projects, this is the future of finance. And if you want to call your tokens money, like, they will obviously need to adhere to the same constraints, let's say, as regular money. This means KYC, AML, that's not going away just because it's on new rails. In our mind, that never made sense. So actually, the first thesis that we had is like, can money live on chain? And that took us 2 years to prove out. Like, we hired Jon Gunnar, who was the first employee, very atypical for a startup, a lawyer. And, we just went through like a lot of regulators in Europe to just prove out the thesis whether this could be done or not. And I think, we searched not only in Europe, we searched across the globe for the perfect license to issue a stablecoin under. And the e-money license, which we gathered or got issued in and authorized in 2019, 2 years later. It wasn't perfect, but it was the thing that came closest to it. And Yeah, so I think we have also seen now MICA kind of enshrining that this license that has existed for over 20 years, not a lot of people know about it, but if you've used Revolut, PayPal, and some of the other fintechs that are non-banks, you probably have used, a company that has this license before without you even knowing.
Okay, thank you for answering. Before I get to you, Pierre, I just want to remind and tell everyone to leave any questions you have to Gisli or to Pierre, because we might choose your questions and later on answer them. So yeah, please do that. And yeah, continuing to Pierre, Euro is backed by European sovereign bonds via SPICO, right? Why does the quality of the collateral matter so much?
If you're a stablecoin, you need to guarantee, the 1-1 peg. And so the 1-1 peg is guaranteed by the fact that whenever you want, you can just burn your stablecoin and receive the amount of fiat money that is corresponding to this stablecoin. So this is also the insurance that the secondary market is pegged, and that's really, really important if you are issuing a stablecoin, either in euro or in USD. And so this was really the first goal of Usual, especially with USD0, to be sure that we are able, whenever you want, to just burn a part of the supply or mint an amount of stablecoin whenever you want. So the fact that we want to be each time pegged to the dollar, you need to have an asset that is really liquid and that is the closest to the electronic money. And for that, you need to have T-bills because it's the best form of fiat derivative. And after that, you need also to be transparent. And it's why having T-bill on chain is the best way to collateralize a stable coin. And this is also what it is planned in MiCA, that because clearly that's the best way to earn a little bit of money and also to ensure that your collateral is safe. So the complete stack is really using, Monerium as a banking rails that also have, I think, a system that is designed like that. And I will let Gisli just explain that maybe. But offering a stablecoin that is always transparent, so you can audit it directly on chain. You can see that the reserve are proven and that is always the same amount of value, maybe more, also because we have a buffer than the collateral behind the stablecoin and the number of stablecoins that have been issued. So that's really, really important. It's a matter of trust and transparency that is ensuring trust. Clearly, it's, I think, the best quality for stablecoin.
Okay, thank you for this answer. And let's talk a little bit about the vision. So maybe let's start from you, Pierre. With this infrastructure in place, what does the end game look like?
So I think the first thing is that, we were speaking just before, the first game for stablecoin is to be distributed and to be used. Our goal as a stablecoin issuer at the beginning, but mostly currently as a DeFi fintech, I think, is really to offer use cases. And one of the use cases for us is to be able to bridge between TradFi and DeFi, but also to expand to other currency, especially with USD, and in the long run to have access to credit card and every product that is offered by, let's say, a normal fintech bank. Because if you want to be sure that in the future, crypto rails will be the same than the financial rails that are used right now by everyone daily, you need to build the infrastructure and the bridge between your product and the existing solution. So one of the goals of Usual, especially in 2026, is to make, let's say, a move and transfer, the first step that was issuing a stablecoin, and after that also expanding to euro, to something that is mostly focused on offering, products that are usable on the daily basis, not just about speculation and so on. So offering investment, but also, payment and so on, really smoothly for the users. And I think it's a key point if you want to be sure that crypto will be democratized as an infrastructure in the long run. Because, like I said, I really think that speculation was something that was interesting for people understanding, learning about crypto, but really it's not something that is sustainable if you consider that this is the future of finance. So finance should be offering services that is not just earning money with some speculation, but building some rails that are clearly creating more value over the long run, because they will be used by people and not just a small amount of people that are, let's say, DeFi people that have already all the code and know how it's working. So really, the aim of Usual in 2026 is to expand this kind of services, to generalize, and to be sure that at the end, Usual will become a DeFi fintech in a way that it will be mostly decentralized, but using the same and offering the same type of product that's currently offered by, let's say, fintech banks.
Okay, and to you, Gisli, where do you see the line between e-money and stablecoins in 5 years?
In 5 years? You mean in crypto years or real years? So actually, just reflecting on the question, I think, I mean, we're already pretty much at a stage where there are no real lines. I mean, there may be some things that we need to do to make sure they're completely gone. But if you take, for example, the regulatory aspect, I mean, we were the first to get the e-money license, which authorized to issue e-money as a stablecoin. Now with MiCA, it's kind of completely been enshrined, as I mentioned. So from that perspective, e-money and stablecoins is the same thing. There are some dualities that I don't want to go into, some lawyer technical stuff, which I think will kind of introduce MiCA 2 at some stage. But other than that, I think from a regulatory perspective, we've kind of solved it. It's good enough, right? For the on and off ramping piece, and by the way, we don't even call it on and off ramping. We just say pay-ins and payouts, because you shouldn't be using a different language to describe something you're doing on a regular basis. I think, I mean, Monerium, with the infrastructure that we talked about earlier, that Usual is building on top of, I think we've to a large degree solved it, at least for the euro. Now, I guess you will be adding other currencies around the globe, and I think this is kind of where I get really excited, because like by the nature of it, like we had legacy banks, and then we got neobanks, like traditional neobanks, think Revolut. And the whole premise there was to build on a clean tech stack, but they were still building in legacy land. And you can see like how fast they were able to move because of just, not having to rely on a legacy, payment, or like they built it from scratch using new methodologies. Right now, we're seeing the same acceleration for crypto blockchain neobanks like Usual, whereby they can effectively, in many cases, build on top of the stablecoin, which means like a clean infrastructure, but also in terms of rules and regulations, like that's now clear. In most cases, like Monerium is taking, we're the ones regulated, we're the ones kind of on and off ramping, and you can start to build like a real neobank on top of this infrastructure with probably 1/10 of the resources needed for Revolut or something, the equivalent. So I think we're pretty much at a stage where the real boundaries have been blurred enough. And if I go like 15 years into the future, I would like to say that we probably end up in a situation like voice over IP, right? Remember Skype, and when Skype entered the market and you were able to connect, through your computer to somebody on the other end of the world, which was kind of remarkable because it was cheap and instant and like you had all the power in your hands. And fast forward, like today, even the landlines at your home, they're kind of all voice over IP. So it kind of just inverted everything. And I think in 15 years, that's going to be the same for, payments, for stablecoins, for, a lot of the financial market, where we'll start to see it invert, meaning that everything is going to be a stablecoin, right? So you may open up your bank account or, PayPal or something like that. And behind the scenes, everything is being powered through stablecoins. So that's what I think.
Okay, thank you so much for these answers. So actually, I think we are at the end. We could actually see if there are any questions, but maybe you want to add something before we go to any questions.
I can maybe add something. You may have seen, like, Monerium is evolving, like we've been innovating for a number of years now. We are introducing a feature that we call liquidity on demand, and we're really excited. We think this could have an impact on not only the URI, but also partner projects like Euro0, where we are trying to solve some of the biggest liquidity needs in DeFi. And we're able to do so because of the technology. So I'll be saying more about this at ECC. We have a talk there. But effectively, what the key insight here is that as the regulated entity, as the minter of the tokens, we actually have some special privileges. And we can kind of mint on demand, if you will. And that is a key insight into what we're now offering. So this means that you can now go to CowSwap. You can see liquidity there. And when you trade 100,000 USDC for euros, the liquidity will exist on demand. So that's quite innovative, and I'll be talking more. So if you're going to attend ECC, be sure to join us there.
Yeah, it's clearly game-changing, because clearly the liquidity, especially on stablecoin DeFi, but especially also on Euro, is quite thin. And I think you will have a great edge, and it's also really useful for partners like us, because clearly rebalancing the secondary market is quite a challenge. Being sure that with T+1, we are able to settle the liquidity and ensuring that the user experience in terms of spread, in terms of fees are great, is a key aspect of the swapping stablecoin and like I said, paying in and paying out. And so clearly will help. So looking forward.
Perfect.
Okay. Then thank you for this. And I've seen there is a question from the community, and I guess this is for Monerium. So when is it expected to add USD? I guess the question is if there are any plans for USD like on ramp with the same model.
Can't comment too much, but like obviously, like whenever we bring something to market, we think it needs to be like 10x improvement over what currently exists. And it's obvious to us that we do have a clear advantage in Europe with both the euro and the pound. I mean, we built out a lot of infrastructure, and to date, our users have transacted something like 7.5 billion euros on chain, of which is probably something like 2 billion off chain. So we do have the operational expertise to kind of transact and move money, if you will. So it makes sense to keep looking to the US, and now that the rules and regulation with the Stablecoin Act, which hasn't been implemented, like there's nobody in the US that has the genius blessed stablecoin. But obviously that opens up an opportunity, but like you need a lot of resources in order to go head to head with some of the big incumbents there. So I'm not going to comment with an exact date or anything like that, but we're looking into it.
Okay, thank you. It's always nice to hear some alphas during those AMAs. I haven't seen here other questions, but I've seen before questions around like if this is available for all of the SEPA countries today.
Yes, as far as I know, it's open to all SEPA countries.
Okay, and one more question, like if you could explain me what's the difference between this and just buying, for example, EURC on Coinbase?
Yeah, I mean, I think it goes kind of towards what we were discussing earlier. like you always have the option of going to a centralized entity and buying money. Like that's one way to think about it. This effectively means that you need to KYC with Coinbase, which is roughly the equivalent of KYCing with Monerium. But it's much harder to build another product on top of that, right? So if you're kind of usual, and you say to your users, okay, so for euros, you have this extremely simple way of just getting an IBAN. And this IBAN now works like your bank account because you can receive money from a third party and it mints as a stable coin and you can safeguard, you can get yield on it through Euro Zero. And then you can at the end of the month pay out your landlord or anything like that. Now, the equivalent is okay, so now you need to do this for dollars. And okay, so you need to onboard specifically with Coinbase and you need to send it to there. You need to probably trade it somehow. There's probably an order book. So, I think we're talking about lowering the barrier, not kind of hiring the barrier. So for me, at least, it's obvious that, this is much preferred to something like EuroC and Coinbase, but views may differ. And probably the right person to ask is Pierre, because
I think you said it. You will have fees, so that's the first barriers. Secondly, I think you'll need to trade. That's the second barrier. So you cannot able to just send stablecoin to your IBAN, because clearly the features is what you can do right now. You just have to send your stablecoin to your IBAN, and that's done. It's done. So that's quite efficient. And after that, you also have the risk of counterparty that you don't have in, let's say, a decentralized infrastructure that aim to be fully transparent on the collateral. So when you stay on the exchange and you are swapping and sending money on the exchange, you have a risk also. And we have seen in the past that sometimes there is some problem. So clearly, you have a lack of efficiency, lack of transparency, and maybe also a counterparty risk. So clearly, this model is better in terms of efficiency, and it's better also in terms of UX.
There you have it.
Okay, thank you so much. Then I think we're coming to a closing. Any last words?
No, thank you, Victoria, for organizing.
Oh no,
thank
okay.
you, and just keep on building.
Yeah,
thank you so much. So euros in your bank account, SEPA out, USD. Thank you to Pierre and Gisli for walking us through exactly how this works and explaining everything and answering all of the questions. And thank you all who tuned in for being here today. There is a lot coming from both teams, so stay tuned on both usual and Monerium X accounts and all of the socials. And stay tuned for more AMAs.